Welcome to Investors Insights, where today's topic is market strength in July, ? We hope that everyone is looking forward to a great July 4th holiday. We've got a lot to talk about today. So as we head into July, a lot's going on. Before I give an update on the Fed, the housing sector, before Ty talks about technicals and seasonality in July, Trey, big important news this week. Not only is July 4th week, but there's a tax bill in the Senate that is very important for the economy and very important for the market. Give us a quick update on that.
Yeah, thanks, Bo. Yeah, so stop me if you've heard this before, but Congress has passed the legislative hurdle on this tax bill. I feel like we've done this vlog several times. I think we've all learned a lot about how many hurdles it takes for a bill to pass, but each hurdle is important. The actual text of the Senate's bill has finally been released. There's been a lot of talk about what may be in the text. Late last week, the Senate parliamentarian, and that's the individual that works for the Senate, decides what can and cannot be included in a reconciliation bill. It's very complicated. We don't need to get into minutia, but that's parliamentarian threw a whole bunch of the provisions out. So the Senate had to kind of start from scratch. The goal was the July 4th. We've talked about this in the past. That's a made up deadline. The real deadline is early August. But anyways, the 1,000 some odd plus pages have been released. There's going to be amendments being attached to it potentially. So there's some slight tweaks, but everything is looking like it should pass. Senator Rand Paul from Kentucky and Tom Tillis from North Carolina are the holdouts that appear to be no's, but with 53 Republicans in the Senate, with this being a reconciliation bill, all they need is 50. All expectations are it should pass today. We're early this week before the July 4th. Now, this doesn't put the bill on the president's desk. It doesn't, how does a bill become a law? This is not how it happens. It will still have to go back to the House because the Senate made massive changes between the House. So the debate will start in heat, a hot debate will start between the House and the Senate once the final text of the Senate bill is passed this week. The House is not going to vote on it this week because they're not at work. The House is on its July 4th holiday. They already passed their portion of the bill, so they went on vacation. The Senate is working through their vacation right now. So a lot still to be decided, but this is a massive move forward. We've had a lot of conversations with clients about this, how it will impact them. This is going to impact people's standard deduction. This is going to impact people's state tax deductions. This is going to impact corporations' deductions. This has a massive impact on the S&P 500 and individuals' tax planning and mortgage planning. So this is the 1,000 plus pages do impact a lot of our lives. So even though there's been a lot of repetition of us talking about it, the reason is because it is so impactful across the board. And so it's something we're watching closely so we can try and plan for it.
Yeah, so the market's going to be following the tax bill progress very closely here the next 2-3 weeks. So it matters, and that's why we keep talking about it. Another thing that matters is the Fed and the Fed cutting rates. And we got an update on the Fed's thinking last week when Chairman Powell testified to Congress, with his message being that the Fed is still in a wait-and-see mode. And you can see in this chart that the number of 25 basis point cuts priced in by year end is still around 2. This is obviously lower than it was a few months ago. He did acknowledge that progress has been made on the inflation front, but tariffs lessen confidence on this. So I think the key takeaway is that the Fed is willing to wait for further weakness in the labor market to materialize before pivoting towards a more accommodative policy stance. Again, the Fed matters. We're watching that carefully. And then one sector that has struggled with higher rates is housing, which has seen positive development in recent months. And as you can see in this next chart, existing home inventory is running at the highest year-over-year growth since the onset of the housing bubble bust in 2006. So, however, the increase should be taken in context because it's coming off an extreme low base, and it's coming off the post-pandemic housing shortage. We'll see if that normalizes a little bit here, but we're still roughly 300,000 below May of 2019 levels of inventory. But headwinds like soft labor data, in addition to elevated rates, should continue to bring supply-demand into balance. And so that'd be a net positive in the housing market. And so, Ty, give us an update on technicals. The market has really shown a lot of strength post the Middle East conflict working itself out, and then talk about seasonality in July.
Yeah, seems like there's a lot going on in the market, as you mentioned, Middle East. Of course, we had the big sell off in April for Liberation Day, tariffs. There's a lot going on, but since that April sell off, the market has been strong, which has been nice. And as we turn the calendar over to July, we wanted to see what that looked like typically. So as you see in this chart here, the dark blue bars are since 1950, and the lighter blue bar is just the last 10 years. July has typically been a strong month for the market. So the old adage, sell in May, go away, you would miss out on some stronger performance in July and then towards the end of the year. But especially over the last 10 years, July has been a really good month for the market typically. And all 10 of those years, the market has been up. So knock on wood, hopefully that continues, to see trend, but a really good, strong outperformance, second only to the month of November. So July, again, doesn't have to be the way this time, but has historically been in a good month. And not only are we turning the calendar to July, we're also going to Q3. So I have another chart here showing how does Q3 typically perform. What's interesting is that essentially whatever is happening in the market halfway through the year kind of tells you the story for the rest of the year. You don't get some steep reversal or some change typically. If the market's in a downtrend going into Q3, typically that continues. Q3 will be the weakest. If the market's in an uptrend like we are now, Q3 is typically the strongest. Makes sense, but I think we always get caught up in hurdles along the way, but it's sometimes just as simple as what happened, in the first 6 months of the year might be what happens in the last 6 months of the year. So we'll continue to keep an eye on things. Again, this is historical data that can, always be wrong on a year-to-year basis, but it's something that we look to when we're, kind of evaluating things on the technical side.
Yeah, so as always, no guarantees, but we like what we've seen throughout history with market performance in July. But a lot going on. Again, we just discussed a lot of topics there. If you have any questions on what we've discussed, email us, call us. We hope that everybody has a great July 4th holiday. We're here to answer any questions of everything going on. Have a great week. Thanks.